Hello, this is MyTam TV exploring United States stocks. Today we're going to analyze some blue chip United States stocks together. The company we'll be covering today is called Reddit. They're using the ticker symbol RDDT. It might not be used much in our country, but overseas it's a huge online community platform with over 100 million users as a global platform. After going public in the United States, its stock price has risen a lot recently, then corrected, showing significant volatility. Let's review together, based on data, whether this company is truly a blue chip, what its future earnings outlook is, and also its valuation and current stock price momentum. Reddit was listed on the New York Stock Exchange in March 2024. At the time of its initial public offering, the stock was listed at $34, and I understand that on the first day it closed more than $20 higher. Since then, the stock price has risen significantly, especially last year as the stock price surpassed the $200 range. It soared nearly 4 times compared to its 52-week low. After that, at the end of the year, as indices like the Nasdaq and S&P went through corrections, this stock also dropped by 65%, which is a huge decline. At this point, it's down 65%, which means it's almost fallen back to the price level before the big surge in the stock price. Companies with rapid growth or recent IPOs tend to have significant stock price fluctuations. They can gain great momentum when rising, but if the market corrects, they can also drop significantly. So from an investor's perspective, if there are companies you want to buy, it's very important to keep them on your watch list and not miss out when a good opportunity comes. And then when the momentum slows down or shifts, I think there are some areas where you need to be cautious. So especially when you look at these areas, I think these are the points where the momentum is turning. At these points, I think it's a good move to be cautious with companies that have risen a lot and to realize your profits at least once. Right now, compared to the 52-week low, it's up about 65% again and is hovering around $150. So I'll talk about the current stock price situation and the company's performance based on the data. I'm not recommending this stock or anything like that right now. I usually analyze about 2 stocks a week for you, and this is just a review of how to look at these companies based on data. If you refer to those things and analyze other companies in the same way on our Chosijak website, I think it will be very helpful for you when you judge other stocks to invest in. The company called Reddit is an online community platform based on interests. So here I've captured some communities from Reddit like this. As you can see here, you can create community platforms based on different interests, and within those, people can write content, leave comments, and interact with each other. So there are quite a few communities related to Korea as well. There are K-popular communities and sometimes even KSTAR communities. So although most of them aren't very active, there are actually quite a lot of these communities that are very active. Currently, the number of daily unique visitors is about 100 million. That's incredible. About 100 million people are visiting, and these types of communities I mentioned earlier are being activated through more than about 100,000 communities. So, since advertising revenue based on the number of visitors accounts for 92% of the total, the company's profits ultimately depend on the increase in the number of visitors. The amount of time people stay on the site is extremely important. Most community-based social networks or communities rely mainly on advertising revenue, so it's all about how many people they can attract to the community and how many of them can be kept engaged there. Depending on this, in fact, the company's advertising revenue and growth are at stake. If you look at the recent first quarter earnings report, you'll see that United States sales were $310 million, which accounts for about 80%. So sales in the United States are very important, and then overseas sales, meaning global sales, excluding the United States again, account for about 20%. However, the growth rate remains quite high. And sales in the United States increased by 57% compared to the same period last year, and global sales grew by about 82%, so you can see that this is a community with a very high growth rate. But the part that could be considered a risk is this. Communities like this in social media are extremely competitive. For us too, the social networking service or communities we use are pretty much set, and once people gather there, they don't tend to move easily. First of all, the competition is very fierce. Secondly, depending on these trends, the influence of a community can fluctuate greatly, so I think we need to consider this as a risk for the company. So for a while, Facebook was popular. Then after Facebook, people moved to Instagram, then to TikTok, and now to X1.com. Just like these trends keep shifting, it seems that these trends are changing rapidly depending on how young people of each age group are active. So even in the case of Reddit, when we look at its future growth potential, in the end it's about the number of visitors, specifically the daily active users or daily active users. These kinds of data are released in materials called investor relations presentations that Reddit publishes. So whether these numbers are stagnating or not is quite meaningful as a leading indicator. So when analyzing Reddit, it's good to pay close attention to these figures. Let's look at whether it's a top quality company first. Our overall SMART score is 63 and the top tier is 19 points. So it's at a level where you can say it's a solid stock. If you look at the chart here, you'll see that this company scores a bit low in areas like monopoly and profitability. The current margin is low, but growth is projected to be above average this year. However, cash generation is very high. With a score of 90 points and a financial stability score of 100, there's minimal short-term financial risk. The company's high cash generation compared to its profitability shows characteristics of a growth stock, particularly those seen in early-stage growth stocks. If you look at the SMART score over the past year, it was 19 points a year ago and now it's 63 points. It's growing extremely fast right now, so companies like this tend to see their stock prices rise quite quickly as well. If you come to Choice Stack and click on the SMART score, then select the same period last year, you can see the data compared to the past year. If this data shows a stepwise increase like this, you can consider it a company that is likely to see its stock price rise for quite a long time. Now let's examine the financial chart, which also clearly illustrates the company's performance. According to the rolling annual data for Q1, which aggregates the last 4 quarters, sales totaled $1.45 billion, a substantial 64% increase. And the earnings per share turned positive for the first time, so the profit margin is improving. If you look at 2024, starting from the third quarter, it turned profitable and seems to be steadily increasing. If you look at the profit margin, the operating margin is now at 2.25%, having turned positive, and the net profit margin is relatively high at 8.1%. Normally the net profit margin is lower than the operating margin, but for this company the net profit margin is overwhelmingly higher than the operating margin. So it's important to check why this happened and whether it will continue, because the company's net profit and earnings per share will depend on that. If you look at the income statement later, you'll see that the non-operating income here is based on quarterly data. Then looking at the first quarter of 2025, it's $20 million, $21 million. The previous quarter was $17 million and $23 million. Usually about $15 to $20 million comes out as non-operating income each quarter. Annually, that's $80 million. If they earn just a bit more, nearly $100 million could come in as operating profit that affects this company's net income. As of Q1 2025, this company's total assets are $2.4 billion with $1.3 billion in cash, or $1.8 billion including cash equivalents. That's a substantial amount. So that's over half, right? If you include cash equivalents, it's about 60%, and it could be almost 70, 80%. Most of the total assets are in short-term investments and cash equivalents. These short-term investment assets are mostly what we call marketable securities. So things like bonds, government bonds, and corporate bonds issued by companies. Since the interest rates are too low to just keep cash, if you buy these bonds, you receive interest periodically or get both the interest and principal back at maturity. So those kinds of income are being generated here as interest income. That's why operating profit. So unless this company uses its short-term investments or cash-like assets for an M&A or some other investment, it's highly likely that the company will continue to generate operating profit in the future. That means, for the time being, net profit will be higher than operating profit, and these assets will play a significant role in maintaining that net profit steadily. That's how we can interpret it. Next, if we look at the cash flow statement, the cash flow statement also uses 0 as the baseline, with the upper part being positive and the lower part being negative. You can see that the cash flow from operating activities has turned positive and continues to rise steadily. So it's recorded as plus minus minus like this. In that case, we can say this is the cash flow of a blue chip stock. The company's operating cash flow is approximately $300 million. Since the net profit is $100 million and the cash flow is about 3 times that, we can say that this company has the potential for its net profit to increase even more in the future. Next, the part we need to pay attention to is the table on the right. As of Q2 2024, cash flow from operating activities turns positive, increasing from a deficit of $47 million in the previous period to a surplus that grows to $100 million, $200 million, and $300 million in subsequent quarters. So when I talk about how to find growth stocks early, I often say to look at the point when the cash flow from operating activities turns positive. The second quarter of 2024, so that's before Reddit's stock price went up a lot. If it turns positive before that, even if the net profit is negative, it's still an early stage where you can trust the cash flow from operating activities and consider buying it as an early growth stock. That's how you can look at it. So Reddit is also a good example of this. If you look at the stock price and earnings per share, you'll see that there's significant growth this year, and in 2025 and overall, there's continuous growth. As for the stock price fluctuations after going public, it surged, then dropped sharply, and now it's rising again. The reason it's rising again here is ultimately because the increase in earnings per share, sales and earnings per share growth, drives the stock price. So the speed and rate at which earnings per share grows will determine the slope of the stock price increase in the future. Let me go over the numbers for you. If you look at the sales, this year it's 42% and the earnings per share is $1.25, which means it will turn profitable on an annual basis. Sales are projected to increase by 28% and 25% in 2026 and 2027 respectively, indicating the company is undergoing rapid growth. And then the earnings per share is also growing by 85% and 38%, so it's increasing quite rapidly. There's a possibility that it will continue to grow for the next 2 to 3 years as well. From the perspective of a growth stock, this company is likely to be the type worth paying attention to in the future, especially when there are fluctuations or corrections in its stock price. If you look at the valuation, when the stock price went over $200 earlier, which I marked in red, that was a point when the stock was highly overvalued. At that time, it was a bit burdensome to buy. The yellow area around July 2024 indicates a period when the stock was significantly undervalued. So actually, the best price to buy was at that price range, and if you look at it, it was about $60, around $60. After adjustments in December, the indexes entered the range between overvalued and fair value for the first time. A slightly larger drop would have likely made it significantly undervalued. After that, the stock price went up again, and now it's back in the highly overvalued range. When this company announces its second quarter earnings, it seems likely that the valuation band itself will rise significantly. So for now, the valuation is a bit expensive, but after the second quarter earnings are announced, there will probably be a good opportunity to buy. So I think it would be good to take those factors into account when looking at this company. If you look at the exponential moving average chart momentum, I looked at it from a midterm perspective because there's a lot of volatility in the short term. So I mainly compare the 21-day and 61-day lines. When the green 21-day line crosses above the 61-day line, we call it a golden cross. If you look here, there was a dead cross at this point, and on June 18, 2025, a golden cross occurred again for the first time. Now the 21, 61 and 101 lines are in the correct order. When the 21-day line tops the short-term and long-term lines, it's called a correct order. Conversely, if the long-term line is above the short-term during a decline, it's called a reverse order. So when the lines are in the correct order, we usually see that the stock price has upward momentum and the upward trend is still alive. Therefore, we can say that Ready's stock momentum has entered a phase where the upward momentum is still alive. The valuation itself is a bit expensive, but if the second quarter earnings come out, there is a good chance that the overall fair value of the stock price will jump to the next level. So I think it would be good if you check those points, visit our website, look at the data, and make your final decision. Let's move to our website, briefly check the current status of Reddit one last time, and then wrap up. If you search for Reddit, you'll see that the current trading signal is to wait and see. Nothing has come up yet. The reason nothing has come up is because the current valuation is overvalued. So up until now, there hasn't been any trading signal for Reddit yet, but I think there's a possibility that a trading signal will appear after the second quarter earnings are announced. So if the second quarter earnings come out more or less in line with expectations, I think we might see some good movement. Even though the valuation is high, if the fair value increases, it might be possible to enter at a fair or slightly expensive price. So I think it wouldn't be too late to check for those changes and then consider investing. Please take a look at the rest of the data yourselves, and if you look below, you'll find news and other information. We're constantly updating these as well, so I hope you can refer to all the news and that it helps you with your trading decisions. The sales and earning per share growth rates shown below are continuously updated. So whether this is gradually going up or down will determine how much Reddit's stock price will rise in the future based on its earnings per share growth rate. You see the percentage up here, the price. This price keeps changing, so check whether it's going up or down. I hope this helps you when evaluating Reddit. If you found this helpful, please subscribe, like, support, and comment. Thanks.